Good afternoon and welcome to the Value Trades November webinar. Today we're looking at the U.S. elections review. Well, we spent a lot of time going over what was going to happen before the elections. We sort of had an inkling that Joe Biden was going to win, and let's all hope that was the case. We all went through a hell of a lot of grief and drama up until this point, and it's still going on, of course. So combine this with coronavirus and everything else that's happened this year. We probably don't want to repeat 2020, and hopefully by 2021, we'll get to some normal trading and normal life, but we're probably a few months away from that. Anyway, again, welcome to the webinar. I hope you enjoy this. It's interactive, so you can ask questions as you go. Please feel free to do that. So what we're going to do is get going. My name is Brad Alexander, and for those of you who have attended webinars before, I do enjoy working with Value Trades. I've been with Graham for a number of years now doing these. And you may catch my videos, the Market Blast videos, on Monday and Tuesday mornings. If you don't, you can see them or simply subscribe to them on Value Trades website under education. So who am I? Well, I'm a trader, I'm a retail and professional trader. Been doing it for years. On a day-to-day basis, I provide content for obviously for Graham and my Market Blast for Value Trades. I provide content for trading companies and fintech companies and brokers, and I run classes for different brokers and for myself. So I've been involved in the Forex market for many years. I really enjoy it. I love the business. And obviously I keep involved and keep tabs on the market so I can hopefully impart my knowledge and whatever's going on to good traders like yourselves. So let's get going on it. Of course, we have to say that CFDs are complex instruments and come with losing money rapidly due to leverage. If you're trading on the FCA regulated, probably less leverage, which is good. But what you should do, if you're not familiar with CFD and FX trading, please make yourself familiar with it. You can contact any of the customer service reps at Value Trades. And again, read the disclaimers on the Value Trades website. It's very important that you understand what you're getting into if you are a beginning trader. Right, so what we're going to be looking at today is, well, here we have a picture of Joe Biden. Well, we assume he's won the election. We are pretty sure that that is the case. So we're going to look at the results of the election, and let's say we already know who won. Well, there's more to it than that, and I'm going to explain as we go. It's not just the fact that Joe Biden won or Joe Biden is going to win or will be inaugurated in January of next year, and he's a Democrat. There's a lot more to it than that. So we're going to cover these various things as we go along. Right, I need to explain, if you're not familiar with the American system and how they do things, it's important to understand this. And you say, well, this sounds boring. How does this affect me? Well, it will, and it will affect your trading. It will affect the way the markets react to certain outcomes that are hopefully coming up in the next little while. Right, we're going to be looking at a thing called presidential election theory. That basically for the first quarter of every presidential term, that the stock market is going to drop. Well, that's not necessarily the case, and I'm going to show why that is the case. I just realized I'm sharing the wrong screen. I apologize for this, but I'm going to carry on anyway. Okay, we need to know Biden's policy and what he's going to be, what he would like to do, what he's thinking of doing as he goes along in his presidency. This will impact quite a few things and quite a few different instruments that we trade. And of course, as I said, 2020 has been a very strange year. So we need to cover all this. You say, well, that's really nothing to do with the presidential election. Here we go. I've got the right screen. But it is intertwined with the way we trade our markets, the way we look at the markets, and certainly the way Joe Biden wants to run things and how he's going to be proceeding with life, basically, and how that's going to affect the markets. All right, and globalization. We're going to be talking about this in quite a bit of detail. This actually is the most important element of today's webinar and Biden's presidency and the markets as we look at it. You might say coronavirus is, but actually globalization is very, very important, and it's affected the markets up until now. So let's take a look at well, we have the U.S. election. As we know, that Joe Biden has 290 electoral college votes, and Donald Trump has 232. At least that's projected. We assume that's going to be carrying through to reality. So what does that mean? If I mean, I'm Canadian, so we voted in ridings, and if our party candidate won our riding, that was one seat in the Parliament. It's the same in the UK, and whichever prime minister gets the most seats in the Parliament wins the election. Well, that's not at all how it works in the United States. They vote for the president directly, or sort of indirectly, as numbers in the electoral college. So what does that mean? So in fact, what's really important to note here is that Hillary Clinton last time, 4 years ago, won the popular vote by quite a bit, but she still didn't get in as president. In fact, if you look at this now, Joe Biden has 79 million votes. Donald Trump got 73 million votes, which obviously that's a lot of people voting for both candidates. So in this case, the vote did actually win out. But what does it mean? What does the Electoral College actually mean? Well, if you can see the blue, California, which voted Democrat, which voted Joe Biden, they carry 55 electoral votes. So basically 55 good people go to the Electoral College and say, I'm voting for Joe Biden. Well, California is the most populous state in the union, so therefore they get the most electoral votes. So if you win California, you're well ahead of the game. So if we go forward to places like North Dakota, they only have 3 electoral votes. So you see right away that winning North Dakota, as Trump did, is not quite as powerful or anywhere near as powerful as, say, winning California. So you can imagine states like New York and Texas and Florida carry more electoral votes. So that's how it works in the United States. So senators voting for basic congressmen really have no bearing on who wins the presidency. It's directly voting for the president and then electing a number of electoral college members to go and vote for you. So that's how that worked out. Texas, as I said, has 38 electoral votes for Donald Trump. Hawaii only has 4 for Joe Biden. So you can see that the representation by population still applies in the United States. It's just a bit more complicated. And the reason that there were a lot of delays in vote counting were that states like Georgia and Pennsylvania, who had quite a few electoral college votes, hadn't come in yet. So until Joe Biden got over the 270 votes, there was really no way to say who was winning the election. But it looks like Joe Biden is going to win, no matter what Donald Trump does. So, right, and why is that important? Well, again, Joe Biden has a completely different idea over how to run the country and hopefully run the world than Donald Trump did. And I could our bashing Donald. I won't do that. That doesn't help us as traders. But it's important to understand a lot of philosophies, the decisions that will be made by Joe Biden and were made or not made by Donald Trump. So it's important to understand that the 3 branches of government in the United States, it's not quite the same sort of trickle down as in the UK or other countries. So we have the Supreme Court, which is the judicial, and they are in theory quite independent of the government themselves. They carry out the laws. Donald Trump, as we know, did try to stack a little bit of it at the very end, but that hopefully will have no effect on anything. The White House is called the executive branch. That's where the president and the vice president reside, and they have the executive powers. So basically, they will put laws into practice when they can. But very importantly, the legislative branch consists of 2 houses, the House of Representatives and the Senate. And this is where things made or break, broken, sorry. Okay, so why is that important? So we have Joe Biden in the White House, the executive branch, who's a Democrat. We have the House of Representatives, which is Democratic, 219 seats versus 203 seats, and that's been like that for quite a while. You may have heard the name Nancy Pelosi mentioned many, many times. Of course, you have. She is the Speaker of the House. So when things need to be passed, in the case of Joe Biden, he will have the complete support of Nancy Pelosi and all the voting numbers he needs in the House of Representatives. This was a problem for Donald Trump because he couldn't get bills through the House of Representatives because the Democrats would block them. And this is what's been the stimulus packages. And this has been affecting the stock market quite a bit. When the stimulus packages are sent through, it helps the stock market. When they're not, it brings them down because without employees and without people getting paid, it just becomes very, very difficult. So we'll talk about that in a few minutes. But what's really, really, really important is the U.S. Senate. And if you can picture this, if we go back to our slide on the different the different branches of government, you can imagine that the White House, the executive branch, is controlled by the Democrats. The House of Representatives is controlled by the Democrats. And if the Senate is controlled by the Democrats, then they can basically get any law they want through the government. Right now, it's not looking like that's going to happen, but it just might. And here's why. We still have the Senate isn't elected every single time the president is. Just quite a few seats are up for grabs, but not all of the seats. So right now we have 46 Democratic seats versus 50 Democratic seats, but there are still some to come. Two of these are independent, and if the Democrats can swing those 2 seats to independents on their side, they will have control. But it's like it works in a parliamentary system as well. Certain parties need to convince other parties that they need to be on their side to get, and so forth. It's the exact same situation here. The beauty is, though, is that on January 5th, before Biden is sworn in, there are 2 more seats being run off in Georgia. And Georgia, as we know, recently went to the Democrats. So if they can get the 2 independents and 2 seats, it will be a tie of 50-50. So the question you're going to ask is, who breaks the tie? Well, Kamala Harris does. She's the vice president. So if the Democrats can get the 2 more seats in the Senate, convince the independents that they should be on their side, and Kamala Harris breaks ties, then basically the Democrats will control the executive branch, the House of Representatives, and the Senate. Why is that important for traders? Because make it a lot easier for Joe Biden to do what he wants to do with stimulus and so forth, which will definitely help the stock market. And it will make, because they're pumping so much money into the economy, it will make the dollar weaker. And this is going to be really important for traders to keep an eye on as we go along. Okay, right. We promised we'd talk about presidential election theory, and that the first quarter of a presidency, the stock markets go down. Well, we're going to take a look at a couple of things. First of all, there's all maybe you have as well heard that all the Democrats are anti-Wall Street, they're bad for the stock market, the dollar will get all this sort of stuff. Well, there's 2 things this graph shows that that's not quite true. And also, I think we can throw that rule out the window because of everything that's happened between various economic crashes, banking reforms from 2008, coronavirus, the subprime market, et cetera, et cetera. Very often the stock market just ignores what's going on in the government, and often it doesn't. So if we look at this chart, we can also see that it didn't matter who was Republican and who was Democrat, the stock market increased as we went along. But what's more important to understand is that not every president or administration, really did anything that would affect the stock market overall. Obviously, they do things. I mean, if you're a trader, you are a trader. And Donald Trump tweeted something last year which affected your trade. I mean, we all saw it. I mean, it drove me crazy as a trader. Stuff came out of nowhere. It's very annoying. Let's hope that doesn't happen anymore. But more importantly, a lot of things will affect the stock market that may or may not be caused by the president. I mean, I'm talking about wars, the subprime market that was going on in the States, the closure of Lehman Brothers, coronavirus. I could go on and on and on. But you can see that in every presidency except Hoover, the stock market went up. Herbert Hoover, if you don't know, you can do a quick Google, was president during the Great Depression. He didn't stand a chance. It really didn't have anything to do with him. Fortunately, the situations that the Great Depression to happen, fortunately, don't exist anymore. So hopefully, we won't have that situation ever again. And in fact, if you drill down into activities that did affect the stock market, we can quickly see that we had embargoes, we had coronavirus, we had the subprime mortgage, we had the closure of Lehman Brothers, we had the dot-com crash, we had the 9/11 terrorist attacks. All these things dramatically affected the stock market, which were completely outside the control of that particular president. So not to say that a president will not affect the stock market, they do, but in the cases of things like wars and crashes, they certainly affected a lot more. So what we need to do now, let's take a look at Joe Biden's policies and what Joe Biden does in the next few months or 4 years is going to affect the way we trade and the way we look at the markets. So on coronavirus, well, this is the first thing he needs to do is to tackle coronavirus. And again, it would be easy for me to sit here and slam Donald Trump and the way he's handled coronavirus. Let's not do that. But let's remind ourselves that Joe Biden was vice president for 8 years under Barack Obama. And they had apparently a lovely plan to tackle pandemics, which unfortunately the current administration threw in the bin when they started. Obviously, Joe Biden wants to resurrect that. And he's just appointed a new chief of staff who was very up on that, Mr. Kane was very up on that plan at the time. So hopefully he will be instrumental in, and he's very famous for being able to get various agencies to work together, which Donald Trump did the opposite. So hopefully with Joe Biden's policies, his idea about his attitude towards contact tracing and mask wearing. If you saw his last speech, he talked about mask wearing in 6 different ways. I thought it was impressive, and hopefully he can convince the American public to do that, and the rest of the world actually to start wearing masks and get back into serious contact tracing and testing. So that is Joe Biden's first task, is to get coronavirus under control. If he can do that, that is going to be wonderful for all the different indices and stocks and so forth that you can trade on your value trades platform. That goes without saying. And of course, vaccines. If you follow my blogs and videos, and you've seen it just recently, the vaccine news, which again, one came out today, definitely affects the markets. Right. Again, getting back to the idea of the Democrats controlling 3 layers of government, the executive branch, the Senate, and the House of Representatives. That happens, then Joe Biden will simply ram through lots and lots of stimulus. He will be in lots of money that no one seems to have to get people back on, being able to get out and buy groceries, pay the rent, etc. Without that stimulus, I mean, it's easy to say, well, if they don't have the money, why should they be paying the stimulus? Because the cost of not having it is far worse than borrowing it and spending it. We all know, we watch all the films from the Great Depression. It was absolutely horrible for the people and for the economy. It's better to borrow the money. The world has learned it's better to borrow the money and pay it back some other way than to let the economy tank. And in fact, Joe Biden said just yesterday, he's concentrating less on skills and more on jobs. So basically, any job is a good job. And that's what he wants to get out there, get money to the companies, coronavirus, and get people back to work. It's quite simple. Right. Okay. Taxes. The Democrats have always been famous for wanting to raise taxes. Maybe they are, but the thing is, it's different now. Taxes are going to be needed to be raised to pay for all this stimulus. It's as simple as that. And Joe Biden has other needs and plans for raising taxes, and it's not a Democrat thing. It's not a Joe Biden thing. This is going to be happening all over the world. So basically, if you raise taxes, you will lower the profitability, of companies, which will bring down their share price, but it will also increase the value of the dollar. If you're an American president raising taxes in the United States, you will raise the value of the American dollar. But so what? We trade Forex in pairs. And what I'm going to be drilling into everyone's heads is to not look necessarily at the United States, but to look at the world. So who's going to raise taxes first? We trade Forex in pairs. So let's say hypothetically you're trading euro dollar, and the European Central Bank or the president of Ursula von der Leyen decides to raise taxes first, or Macron or Merkel, then they're getting a head start on those taxes. The euro will go up against the dollar. So it's not necessarily about who raises someone's raising taxes. It's who's going to raise taxes first. And we trade pairs. We trade Forex in pairs. So taxes go up, the value of the currency goes up, but you need to be very aware of which pair you're trading. Right. Joe Biden is very, very keen on green investment. I think Donald Trump probably thought he was, but he wasn't. So what Joe Biden wants to do is get the United States back into the Paris Agreement. Cost money, but it needs to be done to save our planet. I mean, as David Attenborough says, we're not trying to save the planet, we're trying to save us. And Christine Lagarde is parroting that as well. So it's not about, again, it's not about saving the planet, it's about saving us, which will save the economies. So any money spent doing this is going to be good. In fact, Lagarde said just last week, it's going to be expensive, solving the environmental situation of the planet, but we can't afford not to do it. So Joe Biden is right on board with that. Something else he's going to be doing is he doesn't see any new leases on oil and gas drilling on public land. So if that curtails drilling and for oil and gas, that will decrease the supply, which will increase the value of oil. And of course, you can trade that on the value trades MT4 with oil and U.S. oil, both cash and in futures. Right. Joe Biden wants to pump $2 trillion into green energy. So this is important because there'll be a lot of companies coming up the ladder. Not necessarily you're able to trade them straight away, but as they get bigger, it will affect the S&P 500. Because what will happen is some of these companies will get so large that they will bump other companies off the S&P 500 and simply make it a more lucrative index to trade. An eye on that. Pay for all this $2 trillion investment in green, Paris Climate Agreement. He will have to raise taxes, as simple as that. And he's talking about raising taxes on anybody who earns more than $400,000. And of course, he will be raising taxes to corporations. Globalization, my favorite thing to say. I'm going to be talking about this a little bit later, but one of the things, again, Joe Biden was vice president for 8 years. He was very good at working globally, and our economy has proven that we're better off working globally than we are working independently within each country. And we'll come back to that in a minute. Right. Globalization. Here we are. I've done this little graphic here to illustrate what has gone wrong in the last little while. I mean, Americans, we talk about the president of the United States being the leader of the free world. Well, does that sound arrogant? Does that sound, well, I'm not American, I don't want to hear that? Well, there are two important things to keep in mind. And one is that the American economy is the largest in the world by far. It's huge. And so they basically drive a lot of, and as we know, we as Forex traders, we also know that the American dollar is the linchpin of the entire Forex in the world that we trade in. Love them, what the Americans have done over the last 50, 60, 70 years, is to create a situation globally where everyone can trade together and behave and set the rules. It's been an awesome thing on the road to get the world to work together. Unfortunately, the last president, or the current president, decided to go his own way, and that caused a lot of populism. A lot of countries thinking that they could do it on their own, and Donald Trump definitely wanted to do it on his own. He totally agreed with the idea of a global economy, slapped tariffs on everybody he could think of. Reason, and again, we could talk about this for days, and I won't waste your time because you know the history and you know the politics. What Joe Biden wants to do is to bring everyone together, and there's a good reason for this. As I said, one of the things that happened over the last several decades was the World Trade Organization, various tariffs that were under control, and the world working together based on their natural resources and their strengths. Unfortunately, Chinese, and Ursula von der Leyen has made this one of her bugaboos to fix. The Chinese have taken the Trump presidency as an advantage and started doing things on their own, and it's been impossible to rein them back in. Donald thought he could do it by whipping up lots and lots of tariffs. That simply hasn't worked. In fact, it's hurting a lot of people within his own country. Again, Ursula von der Leyen is saying, we want, and these are her words, not mine. We want the Chinese to do business with us on a level playing field. It's not level right now. And basically, the way to do that is to get everybody together. I mean, we've got all the biggest economies working with the United States, Canada, New Zealand, Australia, Great Britain, Europe. They need to work together to organize global trade again. It's as simple as that. And Joe Biden is in that seat. It's his, all these people and countries together. And I've only put a few on here, but there's no way that anybody is going to control anything unless they all work together. So that is definitely on Joe Biden's agenda, and it's critically important. And I've been telling people as an educator and a trip for the last say 4 years. That's impossible because coronavirus has just popped up this year. The U.S.-China trade relations for the economies is actually larger than coronavirus. I know there's a lot of blips, but it's a critical thing. So how does that affect us? Well, let's take a look going through the various assets that we trade. Okay, so as I mentioned, the value trades, the Dow Jones Industrial Average is basically the 30 largest companies. We call it Wall Street. So basically, anything that increases, say, U.S. or exporting will affect in a positive way the U.S. 30. So watch this space. So anything that Joe Biden does to help these companies with global trade or of the vaccine will increase the value of the share prices of the Dow Jones companies. So the other side of the coin is if they increase taxes on corporations, that will bring the share prices down. So vaccines and trade relations that Joe Biden can bring about will help the indices, this index, and taxes will bring it down. But they're going to fluctuate. As you know, this is going to happen. And it's the same thing with the S&P 500. The S&P 500 obviously is much larger. It's 500 companies. And as I mentioned earlier, one of the things we need to keep an eye on is that a lot of companies will come and go from the S&P 500 once they shrink in size. There's a lot of energy companies and perhaps more pharmaceutical companies coming up through the ranks. So we'll see that way. And again, good news on trade relations and vaccines will definitely affect these indices. News on increasing taxes will have a negative effect on them. Right. I've left the NASDAQ to last, and here's why. Joe Biden has a reputation of being anti-tech, and we need to see if that's going to come to fruition. There's been talk, or he's been talking for quite a long time about breaking up a lot of the tech companies. I mean, we're talking some rather large players like Apple and so forth. So if this happens, this may have a negative impact on the NASDAQ. We don't know yet. We need to see. The thing is, he's actually arranging his cabinet right now, and he has included on his board of advisors a lot of big tech companies. So it's not a done deal that he's going to be dismantling the tech infrastructure in the United States. And again, he knows that these companies in the S&P 500 and the ones in the NASDAQ, they are huge employers. So it doesn't make sense to do a lot of crippling that are going to be costing jobs. So, and again, as traders with value trades, recently value trades is out of the VIX, and the VIX is a really cool thing to trade. Anytime there's any kind of volatility, the VIX will go up, and when things are calmer, the VIX comes down. And what the VIX is, it's a measure of volatility of the options contracts on the S&P 500. So when there's a lot of activity, a lot of sell-offs or crazy buying, the VIX will go up. And when things calm down, the VIX comes down again. Right now, it's at 22. During the height of the coronavirus, it was in the 80s, or not, it was in the 90s. You can see last month it was about 35 when there was a lot of activity, sell-offs and so forth. So you need to, this is not a surefire thing to trade, but when there's a lot of activity, you can never predict when this is going to happen, but you can actually take the trades on the way down, assuming that the markets are going to be calming down. So it's not every broker has this, and it's great that Value Trades has this. So if we look at getting back to Forex, we look at things like the euro dollar. Well, what's interesting about the euro dollar and almost all Forex pairs that are Forex majors, the US dollar pairs, is that you can see, and this is a weekly chart, so we're looking at several years of price action here, but if you look at the right-hand side of the chart, you can see this year that the stronger and the American dollar got weaker. Well, basically, the dollar's been getting weaker all year simply because the market has priced in a Biden win. Everybody sort of knew Biden was going to win. A lot of people predicted a landslide that didn't happen, but the market basically predicted a Biden win. And this explains why the markets and the Forex market didn't go crazy when the election was announced. You may recall 4 years ago when Donald Trump beat Hillary Clinton, the stock market gapped to the downside. The dollar went absolutely crazy for a few days. The price of gold shot up, and then came back down again. That didn't happen this time because the markets assumed that Joe Biden was going to win, and that's basically what happened. But it's important to understand that the Democrat reputation for a weaker dollar, did come through. So, and again, getting back to, let me go back to euro dollar. Again, if European Union or individual large countries like Germany or France raise taxes before the Americans do, or something, that will obviously impact the value of the euro versus the dollar. Obviously, if the Americans raise tax first, then the euro dollar will come down. So again, we trade Forex in pairs, and that's just the way it is. So looking at the Swiss franc, it's basically the same story. You can see dollar weakness has been going on, not just this year, but you can see since early in 2019, you can see a big spike there, a big whipsaw there during the coronavirus pandemic, which obviously affected. So the Swiss franc is a safe haven currency. So anything that affects the markets, people will buy into the Swiss franc. And again, if the Swiss franc gets stronger and the American dollar gets weaker, and the Swiss franc gets stronger, the American dollar gets weaker, you're going to see price action going down and vice versa. Obviously, the pound dollar, you can see it's been consolidating literally, well, for years, except for the coronavirus spike. We're now at 131. And what we need to watch here are, again, trade arrangements, because Great Britain is coming out of the European Union, with or without a deal. We shall see what happens there. So again, whatever happens to the American dollar is going to be affect the pound dollar. But more importantly, if the Brits can strike a deal with the Americans on a trade arrangement, that will drive pound dollar higher. It's more important to the Brits to get that than to the Americans. So we need to keep an eye on that. Right now, Brexit is driving pound dollar cable more than the American situation. So we need to see what's going on there. So keep an eye on your Brexit news and watch for trade arrangements between the UK and the States. Okay, getting back to safe haven currencies, we have dollar yen. Again, you can see the world's largest descending triangle. It's been the American dollar has been steadily dropping against the yen for 4 years now. And you can see support is right where we are now at 104. So it's an exciting time to be trading the yen. And you can see a couple of whipsaws there. And one was obviously the coronavirus, which whipsawed everything. And the other whipsaw was in 2018. Again, when the economies and geopolitical events are calm, the Japanese yen gets weak. And if the American dollar gets stronger, you see price action on dollar yen going up. So we've seen a lot of consolidation recently because they've been actually trading in the same direction. Obviously, if things heat up, geopolitical event like a war or an oil tanker gets seized, then people jump into the Japanese yen, which again will drive dollar yen lower. So keep an eye on that. Okay, dollar CAD. Well, you say, so what? Well, the Canadian dollar is driven more by the price of oil than anything else. And if Joe Biden can do his thing and get coronavirus under control, the demand for oil, air travel, car travel, factory production will get back to normal. Our demand for oil will get back to normal, drive the price up, which will definitely affect the Canadian dollar. So this is going to be affecting dollar CAD more than anything else, to be honest. And the other thing as well is, and this is really, really important to understand, is that, as I mentioned earlier, Donald Trump was chucking a lot of tariffs around at a whim, and there's still a lot of tariffs on, say, Canadian aluminum or aluminum if you're Canadian or American, which make no sense at all. Hopefully, Joe Biden will start, in fact, be eliminating a lot of unnecessary tariffs, help the agreement between the United States, Canada, and Mexico, and we see that as benefiting the Canadian economy more than anything else. Because when I mentioned aluminium, right now it's very difficult to sell aluminium because of silly tariffs. I mean, pardon my personal. The trade people from Canada don't understand how aluminium is a national security threat. So Joe Biden will be looking at a lot of these tariffs, not just with Canada, but China and various other places, and bringing those back to normal, which will help the individual economies. So if we see demand for oil increasing, tariffs coming off, this will help the Canadian dollar, which will drive price action, dollar CAD lower back into where it was, as we can see on this chart, back in 2017, 2018. Right now we're at support, or near support of 1.3. Nice round. Okay. The dollar. So what's that got to do with Joe Biden and the dollar? Well, again, it's a dollar pair, so anything that happens to the American dollar is going to affect Aussie dollar. But more importantly, it's definitely one of these economies that will really benefit by having better trade arrangements between China and the rest of the world. Right now, there's actually a bit of a trade war brewing between, or possibly brewing between Australia and China, which could affect Australian dollar and the Australian companies. So keep an eye on that. As you can see by and this is a weekly weekly chart on Aussie dollar. There was a huge drop after coronavirus, and it's come back up to normal now. But we need to keep an eye on the Australian dollar versus the U.S. dollar. And again, anything that affects the U.S. dollar will affect this pair. And again, I'm going to repeat, trade with China is very, very important to Australia, which will bring the value of the Australian dollar back higher as we go along. And also being a calm dollar. And it's the same with New Zealand. There's a lot of agricultural trade between China, and that really needs to be looked at. And it's a direct result. It will be directly affected by anything that Joe Biden and the combination of all the other leaders can do with globalization. That will definitely help the Kiwi economy as well as the Australian economy. Right. Okay. As we mentioned, oil. So as we can see on our value trades MT4, we have a variety of ways we can trade oil. We've got U.S. oil and UK oil. Right now we're at WTI, which is U.S. oil, $41 a barrel, which is still not great. And I can tell you simply by listening to the news that a lot of companies cannot be happy with that value. For example, a lot of the big companies like Shell and Exxon, their break-even point is between $50 a barrel and $35 a barrel. So they're not happy with the prices. And it's basically a situation of supply and demand. Right now, the demand is so low because of coronavirus that the price of oil is definitely down. And if you ever wondered why UK oil is more expensive than US oil, it's basically supply. There's usually more of US oil available, so it's actually cheaper. So keep an eye on that. And again, I mentioned this earlier, Joe Biden wants to stop any new leases on American drilling for oil and gas, which will decrease supply, thereby increasing the value of WTI. But again, the most important thing is getting coronavirus under control. If we get coronavirus under control, the demand for oil will shoot up and will be $60 to $100. The Saudis really want the price of oil to be about $60 a barrel. The Canadians, absolutely, because Canadian oil comes mostly from oil sands, tar sands, which is the most expensive way to create crude. And it's almost crippling for a lot of companies to have $40 a barrel oil. So we'll keep an eye on this as we go along. Right, gold. Well, what can we say? Gold likes bad news. The price of gold goes up when people are buying it. It's the ultimate safe haven. In fact, often more so than the Japanese yen and the Swiss franc. So you can see on the right-hand side of the chart, there's that big red candle. Well, what does that mean? That was the news from the vaccine the other day. The value of gold doesn't like good news. So basically, the value of gold dropped because a lot of people sold off because they thought this is fantastic news. Well, gold is creeping back up again. There was a bit of activity today with another on a vaccine, which is awesome. We'd all like to get back to normal and stop wearing masks. But you can see what's happened to the value of gold. It was over $2,000 back in August because basically, the market really didn't know where it was going. If we go back to March of 2020, you can see a massive drop in the price of gold. You say, well, that's contradictory to what you just said, Brad. We had coronavirus, which was bad news. Well, the problem wasn't so much bad news. A lot of the hedge funds and banks had to sell off their gold to balance their books because the stock markets were dropping so badly. Coronavirus, they had to find the cash to keep their clients' portfolios balanced, so they sold the gold. And it came back. And during the last 3 years, many, many central banks have been buying gold, which is good because they're going to need it in the next few years to pay for all the stimulus. So basically, when you're trading, looking at gold, and again, we trade gold as a pair. We trade gold versus US dollar. So again, it's the same situation. If Joe Biden wants to raise taxes, that will increase the value of the U.S. dollar, thereby price action on on gold, XAU, USD will drop. Anything that will affect the dollar in a negative way will send gold price action on gold higher. It's as simple as that. Pair. You can trade gold versus euro on the value trades MT4 as well. It's totally your preference, but most of the world trades gold against the American dollar. It's entirely possible that in the future, a lot of economies will have to, in the near future, a lot of economies will have to sell a lot of their gold to pay for the stimulus of coronavirus, including the Americans. The Americans have a huge, massive amount of gold. So let's see, obviously bring the price of gold down, but we don't know when that's going to happen. When these things do happen, when there's a sell-off, nobody can see it coming for logical reasons because they don't want to sweep the market and have everybody selling off before they can. So again, XAU and USD is being by what happens to the American dollar, and even things like the non-farm payrolls, as you know, if you're trading gold, and that's actually a great way to trade news events like that. Right, getting back to globalization. Well, one of the things that we talked about was the way China has been doing business around the world without any kind of global cooperation. And one of the things that has affected a lot of people is what's been going on right now in Hong Kong. So hopefully with global cooperation that Joe Biden can bring together with everybody, with Europe, with Canada, with obviously New Zealand and Australia, getting the situation in Hong Kong back under control. And you can see and this is a weekly chart on the Hang Seng, which is the Hong Kong stock market. It is barely getting to pre-COVID levels. It's actually doing better than we may have thought. But this is the Hong Kong stock market really needs some help, and it needs cooperation from global leaders to hopefully diminish the influence that Beijing is having over Hong Kong. It's actually a sad story, and you can see a lot of dips. Obviously, that there was a big dip in the Hong Kong stock market, the Hang Seng, because of coronavirus, but there have been a lot of those dips created by the demonstrations and the unrest within Hong Kong itself. And this is a huge problem. So why this slide is in this, it's a direct result of the actions to be taken by Joe Biden that certainly were not taken by Donald Trump to bring the situation under control. So let's keep an eye on that, because the Hong Kong Stock Exchange is obviously a very important stock exchange for Southeast Asia, and it needs to run on its own steam and not be influenced by outside forces. Okay, speaking of China, as you can see by the China A50, you've probably seen on your value trades MT4, you've got China A and China H shares. China A shares are anything traded in the Shanghai and Shenzhen markets, stock exchange, and the H are Chinese companies traded in Hong Kong. And as you can see, there's been a steady increase in share price over this entire year. And what's important to understand is that right now, China is the only economy in the world with a positive GDP. They seem to be beating coronavirus. If that is true, we hope it's true. We hope the figures are correct. In fact, you can see this great big spike right in the middle of your chart from June. So why did, in the middle of a pandemic, why did the share prices go up so much? Well, two things happened. The PMIs were quite good at that time, and the PBOC, the People's Bank, lowered interest rates. So that really helped a lot of Chinese companies. And you can see the repercussions. The Chinese are getting stronger and stronger. So if Joe Biden can take off some of these tariffs, get Chinese companies and the Chinese government to cooperate and trade properly within the rest of the global economy, we see no reason why the A50 and the China H stocks index won't be continuing to increase. If they can carry on as they are now in the pandemic with all the tariffs from the Trump administration, they must be doing something right. So let's see if Joe Biden can get the world together and get China back on the trading with the rest of us on a level playing field. And the same with the renminbi, the currency within China. And again, as you can see this year from June, the renminbi is getting stronger. U.S. dollar getting weaker. Obviously, they're doing something right with their currency because it just keeps getting stronger. Do they want to continue doing that? Obviously, if a specific country's currency is too strong, then it makes their exports less attractive. So it's going to be a balance between the tariffs, trade arrangements, and the value of the currency. I mean, we know that Donald Trump accused the Chinese of being currency manipulators at the beginning of his tenure. Well, let's face it, the central bank in any country manipulates their currency. It's their job. They're supposed to do that. They have to balance inflation versus the value of the currency to help exports, but also keep imports under control. So the central bank in China is going to continue doing that as they do with interest rates, and it's a simple matter of watch this space. So you can see dollar renminbi is still not as low as it was 2 years ago, 2.5 years ago. So again, anything to do with that affects the American dollar is going to affect dollar renminbi, and of course the value of renminbi will, of course. So anything to do with trade relations and the Chinese economy will affect price action here. Right, and we're going to finish off with one you might not think about. Again, the Australian indices. Joe Biden can get global relations under control and get Australia trading with China more vigorously again, and perhaps stop this potential trade war between China and Australia. We will see nothing but good things from Australian companies. And as you can see, they still haven't recovered from the coronavirus drop. So that's obviously not great for the Australian companies. So I guess in closing, we go back a bit. As a trader, I'd be very happy to see things getting back to normal. What is normal? We don't have a normal now. Coronavirus, pandemic, trade relations, all this stuff going on. What's going to be normal? Well, maybe by the middle of next year with the vaccines, we will be back to normal. What by normal is avoiding unnecessarily tweets coming out of the White House, getting back to negotiations within the various levels of government, getting all the united individual states. You see this lovely picture in front of you. Instead of pitting all these states against each other, getting them working together again, getting the economies back online, and we'll all be utopianly happy. Probably not, but it'll certainly make things a lot easier for traders like us. Not have tweets coming out and screwing up our trades. So, in a nutshell, Joe Biden wants to get coronavirus under control. He will probably have to increase taxes to pay for all the stimulus. He wants to get Americans back working together. And more importantly, he wants to get all of the United States, individual 50 states, each other working on their medical issues. And he wants to get the global economy back together again to start trading normally. So it all sounds wonderful and very utopian. See if he can pull it off. Clearly, Donald Trump couldn't, too. And again, thanks for watching, and happy trading with Value Trades.